Welcome to the B.F. Anderson Technical Report for June the 3rd. Energy prices are definitely moving up. What we're looking at is potential inflation in the economy, and I cannot think of a better way to play this than with oil stocks. So anyway, oil prices rise on nagging fears of fuel shortages. That's one article. Second article, engine number one wins at least 2 Exxon board seats as activists push for climate strategy change. So they've got 2, maybe 3 board members on the Exxon board now that are basically saying, we don't want you to produce anymore. We don't want you to drill anymore. So what are they going to do? I mean, it's a real predicament. You see, last year, 97% of the automobiles manufactured were gasoline. Only 3% were electric. So, oil's going to be around for a while, and we just need to face facts. But with Exxon, it appears to me that they are really getting in a situation where I would not, as the CEO, I would not know what to do. So also another report on the economy. Americans boosted spending, adding fuel to economic growth. So the economy is recovering. But an article that I read about oil, because the expansion of spending will impact the price of oil. This is a report. You might want to pause your video player, but let me read this one sentence to you. It says, however, we think, and this comes from my friend Mike Samtolo with Cabot Research. However, we think there's a lot more to the story here than elevated oil prices, because we all know oil prices are going up. As we've written before, the exciting perception alerting part of this story is that explorers have learned their lesson from the heydays of a few years back. Instead of emphasizing debt-driven production growth and drilling like mad, nearly all are restraining costs. So what's happening is that they're not drilling. And so as a result, all the cash that comes in the door from $67 oil, which we'll talk more about, basically is dropping straight to the bottom line. So as a result, we have taken an overweighted position in our portfolio in independent oil and gas producers. So let's just get into the market itself. Here's the NASDAQ. We've had a correction. This correction actually started back in February. We pulled back dramatically. Higher low, didn't make a higher high, however made a higher low, and we're just trying to work our way up. So basically, the NASDAQ is looking much better because the 10-day is starting to cross above the 50-day, and we're seeing price improvement. Mid caps, not anything like the NASDAQ. Very positive trend here. Pulled back like everything, and it started to pull up. We're not seeing new highs, but we are seeing improvement. That's the mid-cap stocks. Here's the New York Composite, actually hit a new high. Now realize, New York Composite has a lot of oil stocks, has a lot of banking stocks, financials, things like transports are in the New York Composite. So you can see here, it's really one of the stronger indexes. Here's the small caps, doing much better, actually starting to make, are very close to making a new high. So the small caps look good. Here's the S&P 500. The same correction. We're starting to see an uptrend in the 10-day moving average. A breakout above 42.25 would be very positive. We're at 42.09. NASDAQ on the weekly basis, we continue to hold above the 35-week moving average. And, I must emphasize, this has been one of the better indicators that I've used over the years. And right now, it is basically saying we are still in a bull market. Here's the aggression index on a daily basis. Again, we made a peak, we pulled back, made a low, rallied, made a lower high, came making lower low. So what we need to see here is a break above that 50-day moving average. Now on the actual indicator itself, though, we are back above that 40-week moving average, which means we're on a buy signal, but we do want to see it get back above that 10-week moving average and get into an uptrend before I would become very aggressive on the NASDAQ. Now here's the 3 economic indicators that we're keeping an eye on. This is interest rates flat, flat, flat. It's really amazing to me with all the inflation fears, you would think that interest rates would be moving up. However, the price of oil is breaking out here. Looks like a new high. Now, we'll talk more about oil as we get into the video. Financial stocks continue to be in an uptrend, actually looking very good. This is the number of new lows on the New York Stock Exchange, well under control, no problem. Like I say, this does not look like a bear market. We are in a bull market. This, by the way, this bull market could last for years, so just get comfortable. Now, this is the inverted yield curve. We're seeing a little bit of hesitancy here, nothing to get worried about. You know, an inversion has historically always predicted recessions. We are not seeing a recession. Now, I got to tell you, every bear market I've been involved in, and I've been involved in several since the 1970s, have been accompanied by a recession, but we just don't see a recession right now. Here's the AAII bull-bear ratio, starting to see some improvement, not a heck of a lot, but you can see here that we're starting to see a little bit of hesitancy and moving more into neutral. Now, on the put-call ratio, again, it just continues to stay in the greed area. This is mainly the institutional money. So basically, sentiment is not favorable right now, but it can stay this way for a long time. Now, this indicator is where I'm comparing junk bonds to treasury bonds. It's a ratio. When you see the ratio turning down, it means that the market's discounting a recession, which we got back in 2020 with the pandemic. We got a recession. Now we're seeing a very nice uptrend, but starting to see some hesitancy in here. Nothing to be concerned about, but just be aware of the fact that junk bonds are no longer really outperforming treasuries, but that could change very quickly. Here's Visa, which is just a stock we're keeping an eye on for consumer spending purposes. Again, it came down, broke, gave a violation, actually on a new buy signal now, so Visa is looking constructive. Now, the volatility index back about below 20, no problem there. We did get a little bit of a spike, but back under control. Now, I just wanted to talk a little bit about Bitcoin. I don't know about you guys and gals, but I am very confused on this. I cannot figure this thing out, and I wish I could, but I just don't understand why we would need another currency that is this volatile. Because look at how this particular Bitcoin to the US dollar, I mean, it's basically, you know, it's gone into a major downtrend here. We've actually gotten a death cross on the moving averages. I just do not understand this, but I just wanted to point it out. Now, this is just New York Stock Exchange Bitcoin Index. Same basic story. Now, I want to talk a little bit about oil. Now, I have here the 10-20 moving averages. This is a monthly graph with monthly moving averages, and historically we have always found that if we get a golden cross on this particular indicator, it's always been very positive. But back around 2014, we got a death cross right here, well, 14-15, on the price of oil. Price of oil dropped way down, continued a failed rally, came back down. But now we are getting a golden cross. We are above the trend line, so I just don't know why, but oil prices are starting to firm up, and if you really think about it, oil companies that have survived this market, this oil market, must be in a very strong position. So let's look at what's going on with the top five. Here's Nucor, which is steel. Again, we had a consolidation here, a breakout, pulling back a little bit today, but steel continues to look strong. Here's Matador Resources. Now, this is an oil and gas exploration company. We own this stock. We took a position on it today, in fact, yesterday. It has broken out, looks very constructive. As I'm saying, something is going on in the oil patch that you should pay attention to. This is BioCryst Pharmaceuticals. Not really up to date on this company, but you can definitely see a breakout, somewhat of a consolidation here. Interesting looking pattern. Here's Callon Petroleum. Look at this, up 12% today. Major breakout here going on. Again, oil stocks continue to be strong. We've been talking about this for weeks now. Devon Energy, we own this stock as well. Major gap up. Look at this volume down here. Normally trades 10 million shares a day. This particular day was almost 40 million shares. And today it's already traded 10 million shares, up 3.25. Stock looks very strong. So that's it. If you have any questions, please give me a call. Thank you very much.